computer. It's now my pleasure to introduce you to Andrew Geddes, former chairman of Green Cross Limited, an accountant, consultant to accountancy firms throughout Australia. And today we're going to be talking about why accountants should embrace scaling up. So how are you, Andrew?
I'm very well, Peter. Thank you. How are you?
Good, thanks. So what I wanted to ask you first up was the question. Everyone is suggesting that accountants offer business advisory services as cloud accounting and tax office standardisation puts pressure on compliance revenues. What have your successful firms offered as business advisory services to their clients?
Okay, Peter. Well, we've tended to structure our offerings around three things. So I'll walk you through each one. They're related to the scaling up process, which is the work of Vern Harnish, who's published a book called Scaling Up. So if you want to find out more about the detail of that, get yourself a copy of that book and read it, Vern Harnish, Scaling Up. So the first offering is the basic external CFO type offering, where because of the ability of accountants now to go directly into clients' financial statements, they are starting off by doing a review of current performance. So they'll suggest to the client that they have a meeting and discuss the financial performance of the business. And following that, they'll then talk about, let's then have a strategic planning half day or day. And that's the starting point in this offering. So a basic financial analysis could start with looking at revenue. Who are our customers? Where's the money come from? What's the average sales size in various product or service categories? Is it growing or declining? Attached to that is looking at what marketing is driving sales in those areas. So a thorough analysis of sales and where it's coming from. Secondly, we then look at margin. What are the associated margins on various sales or product or service categories to look at where the profit's really made and can we market and improve growth in that area. Then there's a labour cost and productivity analysis. How many people have we got? What are we generating in sales per person? Average sales size based again on jobs or product lines or services. A cost analysis, looking at what are our expenditures, how do they compare to last year, what are the trends in growth, putting in market owners' market-based salaries and looking at real profitability in the business, looking at cash flow, sources and uses, a review of liquidity, debtors, stock, work in progress, finished goods and the aging of them, looking at capital, long-term debt, leases, retained earnings, how are they financing the business and what's the cost of those various sources of capital and can we do better by changing the mix? Looking at excess assets and if we sold them, what might we get for them and would that be a source of finance for us as well? And finally, wealth creation outside of the business. So the accountant can look at the small businesses, profit and loss, sources and uses of funds and balance sheet and do that analysis. What we then do is suggest a half day or full day planning meeting, usually involving the senior leadership team within the business. If they haven't got one, we suggest they form one. Following on from that, we identify, well, what are the 2 or 3 things we've really got to nail this quarter to improve the business? What meetings should we hold? So the accountant might get involved in preparing budgets and reviewing them on a monthly basis, looking at other KPIs that might be reported on, and then a suggestion of running a quarterly reset. So the accountant offers a basic external CFO offering. In looking at this, they might charge $10,000 fixed fee for a small business, 15 for a medium size, 20 for a larger one. The breakdown could be 2,000 to 4,000 for the initial planning day, 2,000 to set the budgets, 1,200 to run 8 monthly 30-minute Zoom-based meetings and 4 quarterly resets of a day, maybe 3 or half a day, 3 hours, $1,000. So they're pricing this first offering at between 10 and 20,000, depending on the size and profitability of the business, its sophistication and the input that they're going to put into it. So that's the first basic offering, and it comes out of an accountant's basic training. They understand profit and loss, cash flow, balance sheets. They can ask questions around the information that they've now got because it's real-time based because of cloud accounting. The thing that comes out of that might be an identification that the client has to establish a project group and improve something. It could be digital marketing and a better website. It could be putting in a point of sale stock control system and reorder system. Again, it might be sales training and service training for front-facing personnel. So the second business improvement, I'd rather use the term business improvement than business advisory. Business advisory to me is a generic, meaningless term. Business improvement is important. That's what the small business clients are looking for. So the second offering is a concierge-styled business improvement offering. In other words, we can project manage engagement of external specialists for you to help you with a digital marketing or website improvement project or a point of sale stock control system development. These are usually, because we're using external consultants, there's a fee involved. We've got a project manager. We might run some meetings with the client and the external specialists. So again, the fees are based on our assessment of the value delivered to the client and our involvement and what we deliver. Then the third offering is really a scaling up high growth business improvement offering. And that's where the accountant might bring two of their clients to one of our scaling up masterclasses. It's a 2-day workshop where the client's business is put under the microscope and they're put through a number of business planning and improvement sessions. And then the accountant plays the role of the external coach and meets with the client, probably I would suggest with the managing director or CEO monthly, and a quarterly reset with the senior leadership team. And again, you might work through a number of the scaling up processes in terms of defining development direction for the business, its core values, its focus and purpose, the 3 strategic initiatives it has to nail this quarter, who's responsible for the various functional areas, and what pattern of meetings will we hold, develop some budgets and KPIs, and meet and discuss that with the client. So it's evolving out of the basic assessment of financial performance into a business coaching role, utilising the techniques that have been developed by Vern Harnish's global consulting group, the Gazelles coaches internationally, and that's the offering. The business improvement offerings are structured around a basic external CFO review and development of plans and budgets, to a business improvement project management concierge offering, through to a full scaling up high growth involvement with the accountant.
Right, so there's a lot in it, but there's obviously a lot of opportunities for accountancy firms to be making a significant contribution to the business improvement of their clients.
Yes, and it really is working closely with clients. It's very different from a compliance relationship, and it involves the accountant to be quite proactive and set the meeting dates and make sure the client is ready and follows through and implements on the actions that are planned and documented. So it requires someone to be a minute secretary in those meetings and document the action plans, and to start each review with those actions in terms of has it been implemented, and the accountant asks, how can I help to make sure that happens?
That's right. Okay. Righto, we might move on to our next question then, if that's
yes,
okay. And if I can just bring that back up. I don't know if I can. I might just read that question to you, Andrew. In the scaling up process, cash is identified as one of the key contributors to moving up the S-shaped curve of growth. Do you expect the crowdsource funding equity raising will emerge as a key contributor to supplying the cash that scaling up companies will require?
Yes, I do. If you think about the sources of capital, if the small business doesn't have cash that they can put in themselves, they might go to a bank and obtain debt financing, and you know the requirements of that and what the bank will expect. Alternatively, they might find angel investors or private equity investors. Now, they'll want their pound of flesh in terms of margins or equity that they require. A crowdsourced funding equity raising allows the businesses less than 25 million turnover or asset value to raise 5 million in a year, as you know. It's much cheaper than an IPO, possibly a couple of $100,000. But what it requires is the business to document all of the things we've just talked about, and that is its development direction, the functional responsibilities, the strategic initiatives, its focus and values, and it requires budgets. In other words, a documented business plan has to be submitted as part of the crowdsourced funding. Now, I think that's a great discipline, and it's good practice, because if they then move to a larger equity raising, either with private equity or an IPO down the track, they've had this practice and they should be much better at it, and hence hopefully more successful. So I think it's a good step for smaller high growth businesses to take.
Okay, thank you. Question, the next question, Andrew. What do the scaling up masterclasses offer accountants in the way of skill development?
Well, it's really structured around skills in 7 areas, Peter. The first one is goal setting with the client. So what is the business development direction? What will we look like in 3 to 5 years? What will be our revenue targets, our margin targets, our profitability, the establishment of what are the marketing and sales objectives? What sort of customers are we looking for? What are the services and products we're offering? Are we vertically integrating or adding to our core business other related areas in that particular sector? So it's a goal-setting exercise to start with, and it teaches the accountants to go through that process. Business development direction, I guess purpose and focus, core values. What are the 3 things you've got to nail? So it teaches accountants to then move into assessing sales and where they're coming from, and looking at what marketing needs to be done and what sales processes are needed to be improved to attract the better style of customer with the higher margin business, so that we get profitable growth. The third area then is, how do we build a senior leadership team to drive the business improvement projects? And that then you involve that senior leadership team in identifying the business improvement projects we're going to work on each quarter, maybe 1 or 2 or 3, usually no more than that, otherwise nothing happens. There's too broad a focus. Then area 5 is, what are the pattern of meetings? Should we have daily 5-minute stand-up huddles in various work groups? Should we have a weekly operational meeting or job or sales meeting? Should we have a monthly review of financial performance and budget achievement? Should we have quarterly resets of our strategy and our project groups? So designing a pattern of meetings with the client and reviewing what's working and what's not working, and changing that every quarter if necessary. Then looking at, how do we manage cash better? What are the sources of cash and the uses? I don't believe many small businesses review the various sources of capital, be it retained earnings, or be it equity investment, or be it debt financing, regularly enough, and look at the real costs of those things, and consider, as you asked, other sources such as crowd-sourced equity raising. The 7th area is then looking at the individual leadership skills of the SME and the accountant, and looking at creating a leadership improvement plan. So they're the 7 areas: goal setting, sales and marketing, building a senior leadership team, looking at the 3 strategic initiatives we need to nail this quarter, designing a pattern of meetings, managing cash better and looking at capital particularly, and improving the individual leadership skills of people in the senior leadership group. That's what we focus on in the Scaling Up Masterclasses. And so if an accountant comes with a couple of their clients, they'll work together through that process and be able then to go and do it with other clients.
And this gives a tremendous opportunity to some of the younger accountants working for firms, doesn't it, to get some real commercial experience, working with the clients, working with an experienced partner to understand how this whole process of scaling up works.
Well, particularly if they're involved with startups, and the young accountants can work with their younger clients, and why not learn these skills and start being a business improvement styled accountant from the word go, rather than a compliance focused accountant.
That would be great. And in fact, one of the other areas that's the sister product to crowdsource funding equity raising is early stage innovation companies. I'm quite surprised at the number of accountants who have either forgotten about early stage innovation companies, which started in July 2016, or don't know about them. They're a tremendous opportunity for companies under 3 years of age who have developed a new product, process, or service, because they can raise capital and there's something in it for the investors.
And there are a lot of government grants that are available, both state and federal, to help in that process. It's really a question, Peter, of should young accountants be looking at their role within their communities as helping small business be vibrant? Because certainly, not just in regional Australia, but suburban Australia, small business is the major employer. And I feel that we accountants have an obligation to assist small business within our communities so that long term those communities are healthy and viable. Yes,
I most certainly agree with that. In fact, that was the very premise, I suppose, of my embracing of what you were talking about many years ago when you were at the University of New England and Armidale, because on my journey, that's where it started from, that it was an opportunity for accountants to be far more involved in assisting businesses to grow.
Yes.
I had a decade or so with a public company as the chief financial officer and learnt a lot in that involvement. Unfortunately, that's not the career path that every accountant can take. But what you're talking about was scaling up, and now the opportunity to help clients raise capital does give accountants the opportunity to learn those skills and then implement them with their clients.
Yes, well, they are educated in understanding financial management and financial reporting, and the delivery of that information through more sophisticated online real-time cloud-based accounting tools now. So the opportunity there is for us to have a business improvement focus and that relationship with our clients. It's more exciting work, it's more demanding and difficult. And if you run into an area that's outside of your experience set, such as sales and digital marketing or stock control or something that's industry specific, you can always then move to the level 2 offering of a concierge service by saying, we'll find some specialists, we'll project manage them, and then you learn from them with your client. And to me, that as time goes on, you become more experienced and a better all-round advisor.
Yes. It gives accountants the opportunity to grow with their clients, I think, because the majority of these companies that are going to look at crowdsourced funding or are going to look at scaling up are going to currently be clients of small to medium-sized accountancy businesses all around Australia, many of them in regional areas and suburban areas. And it does give the accounting firm, I think, the opportunity to grow with their clients rather than to wave goodbye to them as they go on their growth journey.
Well, that's right. And if you look at Green Cross, who you mentioned earlier, it started as a cooperative of veterinarians based in regional Australia. Townsville was the start of it with Dr. Glenn Richards, and we went to the suppliers and said, give us a better deal, and we got a few basic points on our purchases. Then we met with others in Brisbane and Sydney and Melbourne and formed a bigger cooperative, which then led to the listing of a company and the use of scaling up tools to grow it from 30 vet practices to over 200 vet practices and 500 pet stores and a top ASX 200 company. So that's where it started in regional Australia when I was young with another young man 25 years ago. So it's an example of exactly what we do.
That's a fascinating story. So we might go to the next question then, Andrew. What is the investment required by accountants to get involved in scaling up?
Well, the investment for a small business owner-operator to attend is $1,995. Call it $2,000, make it easy. But the marketing people, of course, don't want me to use $2,000. They want to take $5 off. The second person is $1,800 or $1,795. So two people come from the business for about $3,700, and the accountant can accompany them to the Scaling Up Masterclass at no cost, because we're trying to encourage accountants to come with two of their clients, hopefully from the same business, and then they work on it as a group of three over a 2-day facilitated planning and skill development program.
Okay, so that sounds very good, and I'm just going to see if I can bring up the slide that we've got. I don't know whether I can.
We're running in Brisbane, Adelaide and Sydney. Let me just look at my notes and get this right. Brisbane is August 21, 22. Adelaide, September 4 and 5. There it is. And Sydney, October 9 and 10.
I've got it on the screen there now, Andrew.
3 different locations later this year. And if people go to my website, they can book in. And they might be able to on yours too. I'm not sure yet, Pete, but we can certainly sort that out.
Yeah, we'll do that. And Andrew's website is
www.andrewgeddes.com.au.
Okay.
Makes it easy to remember that way, Peter.
Okay, righto. And we'll just stop that share. So thank you very much for your conversation with me today, Andrew, about this very important process, I think, of accountants getting involved in far more than just compliance work to help those clients who do wish to scale up.
Yes, thank you, Peter. A pleasure.
Okay, have a great day. See you later.
Cheers.
Bye-bye.